Hello everyone, welcome back to the Fintech Executive course. We'll start the episode number 8. So let me ask you something. What if financial services disappear completely, but still exist everywhere around you? You order a ride, you get a loan, you buy online and you get instant insurance. You invest without talking to a bank. This is not the future. This is Fintech. So welcome back to our Fintech journey. Let's review and revise what we talked in the past lectures. We started with our Fintech basics. So we started with understanding Fintech and financial inclusion, deep dive into financial inclusion, business models shaping Fintech. Then in the fourth lecture, we demonstrated the regulations and compliance, then technology foundations, digital banking and payments. And the last lecture was for Fintech startups and innovation. So in the last episodes, we succeeded to finish 7 days of our Fintech course. Then we will start today, we will start with the 8th day. So we reach one of the most exciting parts of the journey. Day 8 is about the innovations in financial services. So today is where everything connects. Technology, business models, startups, regulations, all come together to create entirely new financial experience. So we will not stop here. We will continue with our course. So we will complete our course by other lectures. So we will talk about the financial inclusion strategies, real case studies, and emerging technologies impact. Then we will talk about the capstone project if you want to build your own Fintech vision. So today is a turning point in our course from understanding to innovation thinking. So the real question is, are you just learning Fintech or preparing to lead it? In today's session, we will explore how financial services are being completely redefined through innovation. We will focus on 4 key areas: understanding the Fintech startup systems, understanding the Fintech startup ecosystem. So you will learn how Fintech startups operate, grow, and disrupt traditional financial institutions, and why they are attracting billions in investments globally. Then identifying Fintech incubators and accelerators. We will explore the engines behind innovation, the incubators and accelerators that support startups with funding, mentorship, and market access. After that, we will be exploring innovations in financial services, from digital payments to embedded finance. So we will break down how technology is transforming customer experience, speed, and accessibility in finance. At last, but not least, we will be understanding emerging sectors through simplifying and exploring key sectors such as InsurTech, which is insurance innovation, RegTech, which refers to regulatory technology, WealthTech, PayTech, and more, and understand how each one is solving real-world challenges. But most importantly, you will start thinking like Fintech innovator. So you will not just think about how do I use financial services, but how can I redesign financial services. So let's start. What is really driving innovation in financial services today? Technology, customer behavior, or something deeper? Let's find out. So Fintech is not just changing banks, it's deleting from the equation. Innovations in financial services. Let me ask you a simple question. Why are banks no longer the only players in financial services? Today, companies like Uber, Amazon, and even telecom operators are offering financial services without being banks. That's exactly what we're going to explore today. Innovations in financial services, the rise of fintech ecosystems, and how industries like InsurTech and RegTech are reshaping the future. By the end of this session, you won't just understand fintech, you'll start thinking like a fintech innovator. So to think like an innovator, uh, when we talk about innovation in financial services, we are really talking about one key driver, which is technology. Technology is transforming payments, lending, insurance, investments. For example, PayPal revolutionized online payments. Stripe enabled startups to accept payments globally. In Egypt, Fawry made bill payments accessible for everyone. So innovation is not just digital, it's about accessibility, speed, personalization. Of course, customer experience revolutionized using technology, especially in financial sector, and the API or using APIs transformed the way how fintech institutions are integrated together to change the role of fintech companies and helped them to uh, introduce a new customer experience. We have also robo-advisors and financial intelligence already transformed investment strategies and provided automated data-driven insights for investors. And financial landscape continues to evolve through these innovations, but and didn't only enhance user experience, but also contribute to more inclusive and dynamic global economy. In the embedded finance, the integrations using APIs, as we said before, such as car dealerships that might offer to the customers financing options when they buy a car, or retailers that might offer buy now, pay later for their customers. And this is a great option to facilitate the payments for all customers. Then the increasing popularity of alternative currencies such as cryptocurrencies and digital currencies, which is an alternative option for the traditional currencies. And some experts already believe that they could eventually replace them in the near future. When we are talking about the InsurTech, RegTech, and other emerging sectors, InsurTech is standing for insurance technology. RegTech stands for regulations technology. We have other emerging sectors. So if we are exploring these fintech sectors, such as InsurTech, RegTech, WealthTech, PayTech, these sectors exist because traditional systems is very slow, expensive, and not personalized. However, fintech fixes this. So financial services sector is undergoing a profound transformation with the advent of cutting-edge technologies, giving rise to dynamic subsectors such as InsurTech and other sectors, where InsurTech is intersecting the insurance services with technology to leverage the data analytics, artificial intelligence, IoT to revolutionize the underwriting, claims processing, and risk management. This is not targeting the enhancement of operational efficiency, but also targeting customer experience, so creating personalized customer-centric insurance experience. In parallel, regulation technology or regulatory technology is addressing the complicated landscape of compliance and risk management through employing the advanced algorithms and automations tools, ensuring that the financial institutions will adhere to evolved regulatory standards. Behind these established domains, myriad of emerging sectors continues to redefine the financial landscape, from decentralized finance, DeFi, leveraging blockchain for transparent and decentralized financial services, to sustainable finance, promoting environmentally responsible investments. And these sectors exemplify the evolving nature of the industry and the conversion of finance and technology is fostering a wave of innovation that is promising to reshape the traditional practices, enhance the security, and foster great financial inclusion and increasingly digital world. To zoom in the InsurTech services, we can see that, for an example, if car insurance apps that adjust your premium based on how safely you drive, that's real-time personalized insurance. So applying new technologies like AI, big data, and blockchain to revolutionize the insurance industry, we have some key innovations such as personalized insurance, where AI-powered risk assessment models is offering, or they are offering, tailored policies, dynamic pricing based on individual behaviors and risk profiles. The automated claim processing will help in streamlining the claims handling with robotics and machine learning that will reduce the paperwork and speed up the payouts. In the microfinance, offering affordable coverage for the underinsured populations and niche markets through mobile platforms and data-driven risk analysis. On the other hand, we have on-demand insurance, where pay-per-use models for specific activities or assets, providing flexibility and cost savings. For regulation technology, or RegTech, in RegTech, the focus on utilizing the technology to streamline the regulatory compliance and risk management for finance institutions. We have some key innovations such as regulatory reporting automation, where automated data extraction and reporting tools will be used and reduce the manual work and errors related to compliance. Know your customer, or KYC, and anti-money laundering, or AML platforms, they are now AI-powered solutions, so they can identify customers and verify customer profiles and monitor transactions, enhance the fraud detection and combating finance crime. And the regulatory change management, predictive analytics, and AI-powered insights to proactively adapt to evolving regulations and mitigate compliance risks. Sub-technology, supervisory technology used by regulators to leverage big data and analytics for more efficient and targeted oversight of financial institutions. And the other emerging sectors such as WealthTech, PropTech, PayTech, and WealthTech, the technology-driven platforms are empowering individuals with personalized investment management, Robo-Advisors, and access to alternative investment opportunities. And PropTech, they are transforming the real estate industry through online marketplaces, virtual tours, data-driven property valuation, and blockchain-based property transactions. In the PayTech, innovative payment solutions like mobile wallets, digital currencies, and contactless payments, increasing the convenience and security in financial transactions. We have the top Egyptian Fintech incubators and accelerators such as EFG, AIinFinance, Startup Bootcamp Fintech in Cairo, FlatSix Labs Cairo, or Falak Startups. We have here a full data or a table complete a very good comparison between the different sectors such as InsurTech, RegTech, and other emerging, including their sub-sectors, applications, technology focus, and impact, such as in InsurTech, we have subsectors such as parametric insurance, usage-based insurance, on-demand insurance, peer-to-peer insurance, and the application for each subsector in parametric insurance, such as flood insurance based on rainfall data, usage-based insurance such as car insurance based on driving habits, on-demand short-term coverage for specific activities, and in peer-to-peer insurance will be used insured risk pools for niche market. The technology focus on InsurTech, starting from IoT sensor, big data analytics for the parametric insurance, telematics, AI risk assessment for usage-based insurance, mobile apps, API integration for the in-demand insurance, peer-to-peer insurance. We will use blockchain smart contracts, and the impact is faster payouts, reduce fraud, personalized premium, safe driving insurance, increased access, flexible protection, and lower cost, community-driven coverage. For the RegTech, we have subsectors such as regulatory compliance that will we will be benefited from the automated report and audit workflows. The technology will be used such as RPA or robotic process automation and machine learning, and the impact will improve the efficiency and reduce errors, and the customer onboarding such as KYC and anti-money laundering verification. We will use the biometric AI document analysis, and we will have streamlined onboarding, enhanced security, transaction monitoring. We will use it in real-time fraud detection and prevention through using AI anomaly detection, network analysis, and it will reduce the financial crime risk mitigation. RegTech as a service, cloud-based compliance solutions, and the scalable platforms. It will use scalable platforms, API access, and it will increase accessibility, faster innovation. On the other emerging sectors, cybersecurity, Fintech, healthcare, CleanTech, each subsector will be applied, such as cybersecurity and threat intelligence platforms and incident response, and it will use AI-powered threat detection, data encryption, and the impact will be stronger defense against cyber attacks. So to gain improved inclusivity, financial innovation in Fintech, it will be applied for decentralized finance, DeFi, and blockchain-based payment systems through using secure, transparent financial transactions. In the HealthTech, we will gain improved care access, preventive medicine, through applying it in remote patient monitoring and personalized healthcare AI by using wearable and telehealth platforms. In CleanTech, we will gain energy efficiency and sustainable development through applying it to smart grid management and renewable energy optimization by using IoT sensors and data analytics. The collaboration between traditional financial institutions and Fintech startup, the traditional financial institutions will have an access to innovation, so Fintech startups are at the forefront of technological advancements, offering AI, blockchain, and other cutting-edge solutions that can help traditional financial institutions to modernize their offerings and stay ahead of the curve. And the improved customer experience for Fintech startups are known for their user-centric approach, developing intuitive and convenient financial products and services. By partnering with them, traditional financial institutions will enhance their customer experience and attract new demographics. To reduce the costs and risks, Fintech startups often operate with learner structure and lower overhead, making them cost-effective partners for traditional financial institutions. Additionally, their agility, and willingness to experiment can help traditional financial institutions to test new ideas and mitigate risks. So, in growth stage funding, fintech startups reach and credibility through partnering with established traditional financial institutions will provide fintech startups with access to vast customer base and trust and the trust associated with well-known brand. This can significantly accelerate their growth and market penetration. Regulatory expertise, traditional financial institutions navigate complex finance regulations daily, and their expertise can be invaluable for fintech startups, helping them ensure compliance and avoid cost missteps. Access to resources. Through traditional financial institutions will have an established infrastructure, data, and financial resources that can be leveraged by fintech startups to scale their operations and develop new products and services. We have some examples for collaboration, such as JPMorgan Chase and Numerai. This collaboration leveraged Numerai AI-powered hedge fund to generate investment insights for JPMorgan Chase clients. Barclays partnered with Lono to offer a mobile micro investment platform, allowing users to invest small amounts in a variety of assets. HSBC uses RebelNet for faster and more efficient cross-border payments, improving the experience for its traditional customers. Open source and free fintech apps. While many fintech solutions are proprietary, there are also a growing number of open source and free options available. We have some examples here, such as Open Bank Project, an open source platform for building community-driven financial services. Mojaloop is an open source platform for interoperable digital payments ecosystems. We have also Fintech OS, a modular fintech platform with open APIs, allowing developers to build ecosystem financial applications. The future of finance is collaborative, so traditional financial institutions and fintech startups have to continue to work together. So, through this collaboration, we can expect to see even more innovative products and services emerge, making financial services more accessible, efficient, and personalized for everyone. So now let's review what we explained in this lecture and go to the quiz part. And the first question, what is the primary driving force behind innovations in financial services according to provided content? Traditional banking processes, technological advancements, regulatory standards, operational efficiency? Yes, it is technological advancements. To the second questions, how does embedded finance change the way financial services are offered according to the content? It challenges conventional models. It integrates financial services into non-financial products. It replaces traditional fiat currencies. It focuses on financial inclusion. Thank you. It integrates financial services into non-financial products. What is the focus of InsurTech as described in the content? Personalized insurance, wealth management, contactless payments, real estate transactions. Sure, personalized insurance, which technology is commonly used in automated claims processing within the InsurTech sector. Robotic process automation, blockchain, telematics, AI anomaly detection. Yes, robotic process automation is commonly used for automating the claims processing especially within the InsurTech sector. What does regulation technology primarily address in the financial services sector? Personalized insurance, compliance and risk management, WealthTech, real-time data analysis. Thank you very much. Compliance and risk management. Compliance and risk management is addressing is addressed by the regulation technology in the financial services. That's why we are using technology for regulations. How does regulation technology contribute to improved efficiency in financial sector? Personalized premiums, predictive analytics, real-time fraud detection, streamlined regulatory reporting. Yes, for sure, we need to have a streamlined regulatory reporting that will be very good for ensuring the regulations compliance and where we will focus. What is the focus of emerging sector described as WealthTech? Transforming the real estate industry, personalized investment management, threat intelligence platforms, sustainable finance. Sure, personalized investment management is the focus of WealthTech, wealth technology. How does PayTech contribute to financial transactions, as mentioned in our, as we mentioned today in our lecture? Improving care access. PayTech is not focusing on care access, increasing convenience and security, reducing fraud, enhancing regulatory compliance. Regulatory compliance is for RegTech is enhancing regulatory compliance, regulation technology, but not PayTech, where PayTech is increasing the convenience and security. In the Fintech collaboration between traditional financial institutions or TFIs and Fintech startups, what can TFIs gain from working with Fintech startups? Regulatory expertise, reduced fraud, improved efficiency, access to innovation. There's a real benefit from the collaboration, the real benefit specifically that the traditional financial institutions will gain behind the collaboration or from the collaboration between them and Fintech startups is accessing to the innovation. What is the advantage? On the contrary, what is the advantage do Fintech startups gain from collaborating with TFI, as mentioned in as we mentioned today in our lecture? Reduce costs and risks, faster payouts, regulatory compliance, operational efficiency, of course, reduced cost and risk. What is the significance of traditional financial institutions providing regulatory expertise in collaboration with Fintech startups? Faster payouts, access to resources, improved care access, ensuring compliance and avoiding costly missteps. Yes, ensuring compliance and avoiding costly missteps. Which of the following is an example of successful collaboration between JPMorgan Chase and Fintech startups? JPMorgan Chase and Renault, Barclays and RebelNet, HSBC and RebelNet, Morgan Chase and Numerai. The example that we illustrated today is JPMorgan and Numerai. In the 13th question, what role does open source plays in Fintech landscape according to the content? It increases convenience in financial transactions. It accelerates growth and market penetration over proprietary solutions. It provides free and collaborative options. As we illustrated today, it will provide free and collaborative options according to what we explained today. What is expected to be the future of finance as traditional financial institutions and Fintech startups continue to collaborate, reduce costs and risks, increase convenience in financial transactions, innovative products and services, regulatory compliance. Sure, innovative products and services. And our last question today, which of the provided resources offer insights into collaboration between traditional financial institutions and Fintech startup? World Economic Forum, the Fintech Revolution, Collaborating for Change, McKinsey Company, Banking Transformation, Why Banks and Fintech Need Each Other, Startup Bootcamp Fintech, The Future of Collaboration between traditional banks and Fintechs, all of the above. Sure, innovative products. Sure, all of the above. We have reached our last slide. So today we didn't just learn about financial services, we reimagined how financial services will be provided. We saw how insurance become smart through insurance technology, or InsurTech. Compliance become automated through regulation technology. Payments become invisible through embedded finance, and finance is no longer owned by banks. Think about this. The next financial services you use might not come from a bank. It could be an application, startup, or even you own an idea to provide financial services. So ask yourself, what financial problems annoys you every day, and how would you solve it using technology? Because that might be your next $1 million idea. In the next session, we will move from innovation to the impact, from ideas to financial inclusion strategies. Fintech is not just about applications, it is about changing how the world accesses money. But to tell you the truth, frankly, in the fintech applications, it is just like a click. If you are going to the bank, you have to sign tons of papers, and this is simply the story of fintech. So I would like to thank you for attending today's lecture. If you like this lecture or like this course, please recommend this course and this content to your friend. Thank you very much, and see you in the next lecture, and goodbye.